Hi, it's Jodie Osofsky. Thanks again for coming back to my video blog. Today we're going to talk about interest rates and why you might not want to wait for that purchase or refi. Before we get started, I want to cover a couple quick housekeeping items. The first one is if you'd like to search the entire MLS for all the homes available, click the link right over there. And if you're curious what your home's worth in today's market, click the link right over there for your free home evaluation report. And so here we go. Interest rate 101, we'll call this. I want to start at the very beginning, but first I just want to say if I had a crystal ball, I'd be set. But since I don't, we're going to go here. Mortgage rates, so for those of you that don't know, are tied to the bond market. They're mostly pooled into one big bond that is called mortgage-backed securities. We'll call that MBS for short. Okay, so these MBS, this bond, it's highly sensitive to inflation and the fears of inflation because there has been little to no inflation during the crash. That's why we've seen such historically low rates. Okay. After the election, the bond market overreacted to the potential risk of inflation with the upcoming president. It's clear that they overreacted because it's starting to settle down a little bit now, but experts say that they don't anticipate it to settle back down all the way. They kind of think that those historically low rates are a thing of the past. Coupled with that, the feds really want to raise rates. That's the short-term rates. In December, so any minute, if they think the economy will withhold it, they will be raising rates. The other thing that could affect rates longer term is OPEC, a big fancy oil company, has decided to slow down its production, which the bond market does not like either. So the lesson here and the moral of the story is you got to always do what's best for you. If you wait to time the market, that's like waiting for a crystal ball and control of the global economy, and you're not going to get either. So remember, when you're ready to make a move, you always want to get with a good professional. You want to make sure that you get good information from the professional, not the internet. And just do what's best for you and your family. You can't be on hold forever waiting to buy a home for rates to come back down, because odds are they're not going to go back to where they were. However, if you look at historical rates, anything below 8% is still an awesome rate. Anything below 6% is unbelievable. So take that into consideration and let me know if you have further questions. Thanks again for tuning in.